Hello, 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 hello. Sure. So welcome to our next chapter. So we've already be doing from our audit in 100 pages. So we've already done all of these chapters, and today we will be doing your audit of your PSU, that is your public sector units. So it usually comes for approximately 5 marks, and in the last two attempts it has not come. So this is an approximate 2.8 marks average. Do study this chapter, small chapter, and in this chapter also I have made the keys as usual. So in this chapter, all our keys will be related to finance. So all our keys will be related to finance theme. So that these will be your ultimate last day revision notes. Okay. So let's start with our audit of PSU. Great. So now audit of PSU is approximately 35 pages in your ICA study module. So basically they are saying that there are three categories for organizations of PSU. So PSU, what is a public sector unit? A public sector unit is which is owned, that is at least 51% by your central government or your state government. Only then it will be considered as a public sector unit. Now departmentally, so now there are three categories. There are three categories of organization of PSU. First is your departmentally managed undertakings. For example, this can be your Indian Railways, your Postal Service. So these are departmental undertakings. Next is your government companies, and so this is your first. Second is your government companies, and third is your corporation set up under specific acts. So for example, you have your LIC or you have your UTI, that is your Unit Trust of India. So these are corporation that are set up under specific acts. Okay. Now your Comptroller and Auditor General of India, I'm sure all of you are aware of the concept of CAG. Okay. So your Comptroller and Auditor General of India, now everywhere this will be referred as CAG. So his appointment and salary will be determined by the president. Can be removed if either due to misbehavior or incapacity. That means he was not eligible for the position. First of all, next, hold office for 6 years or age up to 65 years. So either he will hold office for a period of 6 years or till the time he reaches 65 age 65, whichever is earlier. Now audit reports of CAG. Now audit reports of CAG which are relating to accounts of either central government or state government. So if they are related to the accounts of central government, in such a case you have to submit the report. The CAG will submit the report to the president, and it will be laid before the parliament. However, if it is relating to the account of your state government, it will be submitted to your governor of state and laid before the state legislative assembly. So how will you learn? That is, your central government is president, parliament, both are P. Okay, so president and parliament, and the state government, it is always state government, governor of state, state legislative assembly. Okay, now your parliament and the state legislature have constituted specialized committees. They have constituted specialized committees because they do not have the proper understanding to read these reports. So therefore, they have constituted specialized committees like Public Accounts Committee, that is your PAC, your Estimates Committee, and your Committee on your Public Undertaking. So that is your COPU, to which these audit reports automatically stand referred. So as per the law, it is said that it will be laid before the parliament and the state legislative assembly. But however, since they are not capable of reading these reports or providing any valuable inputs, what they have done, they have made these committees. They have made these three committees. These are the same committee that we are talking about. Okay. So they have made these three committees who will review the report. Okay. Now next is your audit of government company. So company where equity held by government. What is a government company? A government company is a company where equity held by government is equal to or more than 51%. Your CAG to appoint auditor and give directions. Now, what all can CAG do? CAG can first of all, he can comment on report. Second is conduct supplementary report, and third is cost test audit. So first is comment, conduct supplementary audit, and third is your cost test audit. Now, what are your CAG's role? Your CAG's role is report, form basis for committee working. So whichever reports he makes, these will be form the base. These will be the basis on what the committee works. These are the three committees that we were talking about. Next, scrutinizes notes submitted by ministries to committee and helps checks facts and figures. So any information that is flowing, from the ministries to the committee, he will fact check the figures and information. Next, audit reports which could not be discussed by committees, written answers obtained from department or ministry concerned, so which were not be able to, which the committees were not able to address, either due to a lot of audit reports or they felt that it was not important. In such a case, he will obtain written answers from the department or the ministry concerned. Okay, now the three types of committee that we did, three types of committees. First is your PAC, that is your Public Accounts Committee. Then there was your Estimates Committee, and last is your Committee on Public Undertaking. This is also your COPU. Okay, so now your public accounts. So duty of committee, it is a duty of committee to satisfy itself that. Okay, so now there are 4 points. There are 4 points that it has to satisfy. First, that money distributed legally for purpose for which they were applied. They have to make sure, they have to satisfy themselves that the money which is distributed, by this PSU, that is first of all legally and it is applied. That means it is used for the purpose that it was intended to. Next, expenditure incurred was authorized. Of course, you will need authorization for the expenditure incurred. Reappropriation has been made in accordance with provisions. And last is examine statements of accounts of auto and semi-autonomous bodies. Okay, so let's see the key that we made for this. So we did this three categories of PSU. What are the three categories of PSU? We did government companies, corporation setups under specific acts. This was, for example, your LIC, and departmentally managed undertakings. So this is, for example, your railways. Okay. So your key is GCD, that is give cash deposit. I told you all our keys will be related to finance. So that is your give cash deposit. Then next we do Comptroller and Auditor General of India, that is your CAG. So appointment and salary determined by the president can be removed is due to misbehavior or incapacity. And third was 6 years or 65, whichever is earlier. So hold office for 6 years or up to 65, whichever is earlier. Next is your powers of CAG. So powers of CAG, if you remember, we did three. First is comment, then supplement, and third was test. So therefore your key is CST. So cash settled transaction. This is your CST. Comment on report, conduct supplementary audit, and cause test audit. Next is your CAG's role. CAG's role is savings brings wealth. That is your SBW. So scrutinizes notes submitted by ministries to the committee. You remember we were talking about the fact check. So it checks the facts. Okay. Next is reports form basis for committee working. Reports form basis for committees working. And last is written answers obtained from department which the committees were not able to discuss. Okay. Next, what did we do? We did public accounts committee. We did public accounts committee. The first committee, public accounts committee is duty to satisfy itself that it has to satisfy itself in 4 areas. So that is your LSAR. LSAR stands for Love Stocks Annual Return. You are checking some stock. So you are loving the stocks annual return, LSAR. So money distributed legally. Money distributed legally. Then S stands for statements of accounts examined. A stands for expenditure incurred was authorized, and R stands for reappropriation as per provision. So it is love stock annual return, LSAR. L was legally, S was your statement of accounts examined, A was expenditure incurred was authorized, and R is your reappropriation as per provision. Okay, let's go back to the chapter. So we are done with your public accounts committee. Now next is your estimates committee. Now your estimates committee, as the name suggests, what will they do? Estimates committee estimates, examines with a view to, first it is report what economies, efficiency or reforms, improvements consistent with the policy may be effective. That means how to make your operations more effective and efficient. Next, suggest alternative procedures. If they are doing any procedure which might be inefficient, they will suggest alternative procedures. Examine whether money is laid out within the limit. And last, suggest form in which estimates shall be presented to the parliament. That is, in what form, how will you present this to the parliament? So The key for for the estimates committee. So this we done public committee. Second, we are doing estimates committee. If you remember public committee key was love stocks annual return, LSAR. L was your legally, S was your statements, A was authorized, and R was your reappropriation as per provision. Okay. Now your estimates committee examines estimates with the view to. So that is your leaf. The key is leaf. That is legal expenses are fine. Legal expenses are fine. So L stands for money is laid out within limit. E stands for report. What effectiveness, economy, efficiency improvements may be effected. Alternative policies suggest, and F stands for suggest form in which the estimates will be presented to the parliament. Okay. Next is your committee on public undertaking. So the same financial control on PSU as the PAC exercises on government departments. That is your same as per PAC. This examines, now what all does this examine? It examines reports and accounts, reports of CAG, autonomy and efficiency, whether the PSU managed as per sound business principles and prudent commercial practices. That means whether the business is being conducted as a normal rational man would, or is it not. So what does they examine? They examine reports and accounts, reports of CAG, and third is your autonomy and effectiveness. So Committee on Public Undertaking examines your RAR, so reports and accounts, autonomy and efficiency, and reports of CAG. Okay. Now next is your objective and scope of your public enterprises audit. Now what is your objective and what is scope? So there are 7. First, it should not be constrained to financial and compliance audit. So your enterprise, your public audit is not only constrained to your financial and compliance, it also checks your efficiency, economy, and effectiveness. Why? Because it is the taxpayers' money that is being used. So they have to ensure that whatever expenses, whatever expenditure the company is doing, whatever expenditure the public sector unit is doing, whether it is sound or not, whether you are getting the most benefit out of it or not. Second is your propriety audit. So examination of management decision, whether taken in the best interest of the undertaking. So under propriety audit, you check that whatever decision the management has taken, are they in the best interest of the undertaking or not. Third is your comprehensive audit. Whether undertaking has fulfilled objectives for which it is established. Whether value for money has been obtained, you will review decisions and performance will be appraised. So what are you checking under comprehensive audit? Whether undertaking has fulfilled objective, that is what objective it was filled, has he fulfilled the objective, and whether value for money, that means is it worth it. Next, organization's decisions to be taken by competent authority. So whether the decisions were taken by the right authority or not. Helping government by improving efficiency and effectiveness, analyzing causes of shortfall. That, of course, in such a case, you will be helping the government because your government is a major stakeholder. Next is your highlighting issues of efficient and economic operations. Okay, this is the same that we did in the first point also. Okay, so throughout this chapter, you will heard this word repeatedly: efficiency, economy, and effectiveness. Economy means doing the thing at the least cost. Efficiency means in the least cost, you are getting the maximum benefit, you are getting the maximum output. That is your efficiency. And your effectiveness is just doing right. That means what, forget the cost, but whatever you are doing, is it effective or not? For example, you are doing Ratta of this chapter. Now, this Ratta of this chapter, ideally it should take 3 hours. That means you are efficient. If you take 6 hours or you take 10 hours, but you do the chapter properly, then you are effective. And if you take only 1 hour, to do this chapter, then you are economic. Okay. Next is your fiscal and managerial accounting. So under fiscal, audit of provision of funds, sanctions, compliances, and propriety. However, under managerial accountability, it is audit of efficiency, economy, and effectiveness. So under fiscal, you will check the provision of funds, sanction, etc., etc. But under managerial accountability, it will be audit of efficiency, economy, and effectiveness. Okay. Now your Supreme Audit Institution of India. Okay, so your Supreme Audit Institution of India is your CAG and your Indian Audit and Accounts Department. So both of these together are considered as your Supreme Audit Institutions of India. So your responsible party is the auditable entities plus those charged with governance. That means whoever is being audited and those charged with governance, they are the responsible entity. Intended users is users for whom the report is made. Subject matter. Information or activity that is being measured against the criteria. So whatever activity you are checking against some standard benchmark, against some certain criteria, so that whatever activity you are checking, that is your subject matter. Next is your criteria, that is the benchmark used to evaluate the subject matter. That means from whichever you are comparing, the benchmark that you are using, the standard that you are using, that is your criteria. And last is subject matter information. Outcome of measuring the subject matter against criteria. So this is your outcome. That means after comparing what is the outcome. So now your types of engagement. Types of engagement is first attestation engagement and second is your direct reporting engagement. So your attestation engagement, responsible party measures subject matter. What is your subject matter? So we did the definition, that means whatever thing you are comparing. So responsible party measures subject matter against criteria. Of course, you will compare it against the criteria and submit information to auditor who gathers sufficient and appropriate evidence to form an opinion. So this is under your financial audit. Okay. Now next is your direct reporting engagement, where the auditor measures the subject matter against the criteria. That is your direct reporting. So in attestation engagement, it is the responsible party who does this. Responsible party is the auditable entity than your TCWG. Okay. So please make sure what words we are using. Therefore, I put it over here itself. Okay. So now let's see the keys that we have made. So objective and scope of public enterprises audit. So the key to learn this is DCHFFPE. DCHFFPE. Sir, how will I remember? Dividends can help forecast financial performance efficiently. Dividends can help forecast. Dividends can help forecast. DCHF. DCHF, 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 FPE, DCHF, FPE. Dividends can help forecast. Dividends can help forecast financial performance efficiently. Okay. Dividends can help forecast financial performance efficiently. So D stands for decisions to be taken by your competent authority. T stands for comprehensive audit. H stands for helping government. F stands for fiscal and managerial accountability. Remember, I put this in two lines: fiscal and managerial accountability. It is not constrained to financial and compliance audit, propriety audit, and highlighting issues of efficient and economic operation. So because there is efficient over here, therefore I have also used the word efficient over here, so that at least one point you will remember from the key itself. So dividends can help forecast financial performance efficiently. Okay, now your types of engagement, we've already done this: attestation and direct reporting engagement. Now next topic that we will be doing on that page. Next topic is your principles of PSU audit. So principles of PSU audit, first is your general principle. So your general principles for PSU audit are total 9. First is ethics and independence. Ethics and independence. Second is your quality control. Third is audit risk. Don't worry, I've made a key for this also. Ethics and independence, quality control, audit risk. Fourth is your audit team management skills. Fifth is your communication. Sixth is your documentation. Seventh is your materiality. And eighth is your professional judgment and skepticism. Okay, professional judgment and skepticism. So first was your ethics and independence. I hope everybody knows what ethics and independence are. Of course, you need to be independent. You should not have any connection. You should not have any relation to the auditee. Okay. Second is your quality control. That means whatever audit you are doing, there should be some quality control as to your work, as to whether you are doing your work properly or not. There should be a quality control. Third is your audit risk. Audit risk means there might be a misstatement, or when an auditor gives a wrong opinion, when an auditor gives an incorrect opinion. So either the financial statements are misstated, but he gave a true and fair view that everything is okay, nothing to worry about. or the other way around, that means he gives an adverse opinion whereas the financial statements do not have any error. This is your audit risk. Fourth is your audit team management skill. That is your audit team management skill. That is how well you are managing your people. How is the communication coordination? There should be no coordinate. There should be no overlapping of work. Fifth is of course communication, very important. Sixth is documentation. Your entire audit journey is rests on documentation. Seven is your materiality, that is with regards to how important something is. Eight is your professional judgment and skepticism. Professional judgment and skepticism. Okay, so these are your principles of audit. Let's see the key that we made for this. So general principles, this we've done. Now we are doing general principles of your PSU audit. General principles of PSU audit. Okay, try to remember what key we had made earlier. Key we had made earlier, dividends can help forecast. Dividends can help forecast. DCHF, dividends can help forecast financial performance efficiently. Financial performance efficiently. Okay. Under general principles of PSU audit, equity equity and precious metals are crucial for diversification. Equity and precious metals are crucial for diversification. So I forgot to make them bold. EQAP MACD. EQAP MACD. Okay, so equity and precious metals are crucial for diversification. E stands for your ethics and independence. Q stands for your quality control. A stands for audit risk. P stands for professional judgment and skepticism. M stands for materiality. Audit team management skills is with your A. C stands for communication and D stands for with your documentation. So that is equity. Equity in, remember, in equity you have to take both E and Q. So equity and precious metals. Equity and precious metals are crucial for diversification. Equity and precious metals are crucial for diversification. Okay. Next is the principles related to audit process. Principles related to, so first that we did over here was a general principles. Now we are doing the B part, that is principles related to your audit process. So first is of course you're planning the audit, second will be conducting the audit, and third will be reporting and following up. Planning the audit, conducting the audit, reporting and following up. Great. So first is establish terms of audit, obtain understanding of entity and identify the risk of fraud. So while you are planning the audit, you have to do all of this. First is the terms of audit. Second is obtain understanding of the entity, because if you are going to audit them, you definitely need to understand what business they do. And third is identify the risk of fraud. Okay, next is conducting the audit. That is your second process. So conducting the audit. Perform planned audit procedures to obtain audit evidence. Your planned audit procedures to obtain audit evidence. And next is evaluate evidence and draw conclusions. Evaluate evidence and draw conclusions. Third is reporting and following. Reporting and following up means you've already done the audit, you found the observation. Now you have to report this. You have to put this in a report format and follow up with them. So prepare report based on conclusion reached and follow up on reported matters as relevant. So these are the two things that we will be doing here, because once you've given the report, you also have to make sure, you should make sure that they have made the changes or not. Otherwise, next year the same problems will be there. So therefore, you have to follow up with them. Okay, so the process is planning, conducting, reporting, planning, conducting, and reporting. Okay, so the key we've made for this: planning, conducting, reporting. Planning, conducting, reporting. So price cash ratio. Planning, conducting, and reporting is your price cash ratio. Okay. Next is your audit of government company. So steps to audit a government company. First is appointment of auditor. Appointment of auditor under section 139(5), 139(7), and 143(5). So your auditor is appointed under three sections: 139(5), 139(7), and 143(5). This is your first step. Okay, so while learning step, please don't mix and match. It has to go in the same order. Any processes, any steps, all of them should follow the same order. Do not shuffle the steps due to learning, otherwise your marks will be cancelled. Okay, so appointment of auditor under section 139(5), 139(7), and 143(5). Second is your conduct supplementary audit under section 143(6)(a). Third is comment upon or supplement such audit report under section 143(6). B. And fourth is your test audit. So if you remember, these words are very, very familiar to us because now we've done test audit, comment on supplementary report, etc. etc. Okay. So statutory auditor appointed by CAG. Remuneration decided by individual companies and auditor to submit copy of audit report to CAG. So audit stat auditor will first be appointed by your CAG, that is your Comptroller and Auditor General of India. First, your stat auditor will be appointed by your CAG. Remuneration will be decided by the company and auditor will submit the copy of the audit report to the CAG. Next is your supplementary audit under section 143(6)(b). 143(6). Sorry, 143(6)(a). Your comment is 143(6)(b). Okay. So 143(6)(a). CAG within 60 days of receipt of report has right to conduct your supplementary audit of financial statements. So once he receives the application, he can do a supplementary audit. Third is comment upon or supplement such audit report under section 143(6)(b). So these comments by CAG shall be sent by the company to every person entitled to receive copies of your audited financial statements under section 136(1). And fourth is your test audit. So in case of companies covered under 139(5) or 7, CAG may order to cause test audit. They will cause test audit as per section 192A, as per section 19A of your CAG Act 1971. Okay, so your audit of government companies has four steps. Audit of government companies has four steps. Your first step was appointment of auditor, because if there is no auditor, how will you audit? So first will always be appointment of auditor. Second is supplementary audit he will conduct. Why? Because he received application. Third, comment upon or supplemented or such audit report. And fourth will be your test audit. Okay, let's see the key that we made for this. So audit of government companies steps, that is your achieve target credit score. Achieve target credit score. So over here I've mixed and matched, but you do not mix and match. Your first is appointment of auditor. This is your first, that is your appointment of auditor. Then second, if you remember, we did 143(6)(a), that is you can supplement the audit report. Then third was comment upon, and fourth was your test audit. Okay, so please make sure I have only written this for the purpose of learning. Whenever the question says steps or processes where the order matters, please do not shuffle your answer. Write it as per stepwise. Okay. So your fiscal audit is conducted to express opinion on financial statements and enhance the degree of confidence of intended users in your financial statement. That is your financial audit. Okay, next is your compliance audit. So independent assessment of whether given subject matter is in compliance with the applicable criteria. So for example, I under compliance audit, I tell them that boss, I have an attrition rate. That means the number of employees that are leaving every year, that is my 18%. You compare it with your industry standard. Since you know more, you have audited so many companies, you please let me know what changes I can do. So it is an independent assessment of the given subject matter. What data I'm giving them, what problem I'm giving them, is the subject matter is in compliance with the applicable criteria. That means whatever standards they have set, whatever standards they have seen in the industry, does my organization stay at par with them or not? So compliance audit is concerned with two. First is your regularity and second is your propriety. So adherence of subject matter to the formal criteria emanating relevant laws, regulations, and agreements applicable to the entity. So your regularity, this is why boss, do everything proper, nothing against the law. Propriety is observance of general principles governing sound FM and ethical conduct of officials. Compliance audit is generally conducted either. So when do we do a compliance audit? When are we doing compliance audit? So that is either when you are auditing your financial statements or you are separately doing as an individual audit. And third is combination with the performance audit. So either you are doing it with audit of FS. Second is either you are doing it alone, that is separately as an individual audit. And third is combination with performance audit. When compliance of audit is part of performance audit, compliance is seen as one of the aspects of economy, efficiency, and effectiveness. Okay, so this is your compliance. Great. Next is your performance audit. So performance audit we will brush through. It is not very long. Okay. So performance audit, objective and systematic examination of evidence. What are you observing? What is a systematic examination? It is your evidence. So objective and systematic examination of evidence for the purpose of providing an independent, you are providing an independent assessment of performance of government organization, program, activity or function. Now what you have to keep in mind, it is not that always an entire department will be audited. What could be audited? A program that they conducted, any activity that they conducted, any function they conducted, all of those also will be covered in this. So in order to provide information to improve public accountability and facilitate decision making by parties with responsibility to oversee or initiate corrective action. Why? So why are we doing this audit? So that you can tell them, so that facilitate decision making by parties with responsibility to oversee. So wherever I have noticed something, I will tell those parties so that they can initiate the corrective action. Next is conducted by CAG through various subordinate office of your IAAD, that is your Indian Accounts and Audit Department, IAAD. So your conducted by CAG through various subordinate offices of IAAD. Improves performance through examination of whether. So how does this improve performance? How any person will ask, boss, I'm doing a performance audit. You tell me how it will be beneficial. So first is decisions taken by the legislature or executive are efficiently and effectively prepared and implemented. So this is you will check, and second is whether the taxpayer have received value for money, that is for whatever purpose their money has been sent. Is it worth it or not? Next is your addresses issued regarding. So now if you see again, all three are there: economy, efficiency, and effectiveness. So if economy is all about minimizing the cost of resources, minimizing the amount of time that you take. Resources can be anything. It could be money, it could be time. So minimizing the cost of resources used for an activity, having regard to appropriate quantity, quality, and your best price. Next is your efficiency. Efficiency means input output ratio should be highest. That means you are efficient or not. Okay. Maximum output with minimum input. So points to check while auditing. So there are certain points that you have to check whether it is efficient or not. Whether the public sector undertaking that I'm auditing, is it effective or not? Okay. Not effective. Efficient we are doing, correct. So first is your sound procurement practices are followed. Resources are protected and maintained. Resources are efficiently used. Okay, so first was your sound procurement policy. Then we had 2 points with regards to resources. So that is, resources are protected and maintained, and resources are efficiently used. Okay, of course we are talking about efficiency, so that has to be efficiently. So resources are efficiently used, resources are protected and maintained. Next is your optimum amount of resources are used in producing appropriate quantity and quality. Appropriate amount of resources, that means nothing should go to waste. Efficient operating procedures are used, and last is objectives of public sector programs are met cost effectively. That means your public sector programs, they have a certain objective for which they are made. So we have to make sure that whatever expense we have done, is it worth it or not. Third is your effectiveness. Effectiveness is the extent to which objectives are achieved. It is basically on your accuracy. That is, whatever you had planned, did you do it or not? Forget the time, but is it effective or not? It is your intended impact versus your actual impact. So how do you test effectiveness? Effectiveness you will be checked. For example, you tell me that, Dheer, you give me this house, you give me one day, and I'll clear everything. I'll make this house so nice. Now you will be effective if you complete this, if you finish this, even if you take more than 1 day, you will still be effective because you did a good job. Okay. So points to check while auditing. First, determine extent to which a program achieves your desired level of result. Because when you are auditing a program, you have to check, that is, that internal return that they require, did they receive that or not? Next, whether social and economic impacts of a policy are due to policy or any other changes. So if you notice any social and economic impacts on the people around you, you have to make sure that this is not only because of you, or is there anything happening outside also. Next, Identify factors inhibiting goal fulfillment. Next, assess effectiveness of program. Identify ways to make program work more effectively. And last is your assess compliance with your laws and regulations. So I know you are waiting for the key. This we've already done regularity and propriety, that is your compliance audit is concerned with. Next is compliance audit is generally conducted either with your financial statements in combination with your performance audit or separately as an individual unit. Okay, performance audit addresses three issues if you remember: economy, efficiency, and efficient. So this is the same: economy, efficiency, and effectiveness. Next is your efficiency points to check while auditing. So while you're auditing your sector undertaking, in such a case you have to check whether they are efficient or not. Same point that we are doing. So the key is equity stock return overpowers the risk. Equity stock return overpowers the risk. I know you must be knowing the terminology OP. Okay, so equity stock return overpowers risk. E for efficient operating procedures, sound procurement policies, resources are protected, optimum resources utilization. Public sector programs are whether they are met cost effectively, resources are efficiently used. Okay, so this was your efficiency. This was your efficiency. Second is your effectiveness. So debt conversion fees. The key is debt conversion fees, that is DC fees. So D stands for desired level of result achieved, compliance with laws and regulations. If you remember, we did this the last point. Factors inhibiting goal fulfillment. Effectiveness of program, you will assess that. Why to make programs, how to ways to make programs work more efficiently. And last is the social and economic impacts due to policy. You have to check if there are any social impacts. Is it because of my policy or are there any other changes also happening in the environment? Okay. Next is your objectives of performance audit. So now what audit did we do? Right now the audit that we did was your performance audit. Now we are doing your performance audit only, but objectives. So objectives of performance audit are evaluation of economy, efficiency, and effectiveness. The entire chapter you will see these three words. Promotes accountability by assisting those charged with governance and oversight responsibilities to improve performance and transparency. Next, focuses on area in which it can add value, which have the greatest potential for development. So if they are doing something, of course, they should be adding value to the whole process. Next is planning for a performance audit. Planning for a performance audit. I will read the head points and I want you to read the inner points on your own. Okay. So first is your understanding the entity through. So there are certain documents, there are some board meetings that you can read, there are media coverage, any special focus group. All of this will be covered in understanding the entity. Second is define objectives and scope of audit. So objectives and scope both have been defined over here. If you want, you can pause the video and read. Third is determining audit criteria, that is whatever standard you have put. Next is your deciding audit approach. You have to check that, boss, how will I approach this audit? Next is you will establish time and table resources. Okay, you will establish this. Then preparing audit design matrix. You will prepare an audit design matrix, that is what all risks you have to cover, what controls are there, and how will I test these. This is your design matrix. Assess audit team skills and whether outside expertise required. That means whichever audit you are doing, is your current team enough, or do you need to hire more people from outside who have the relevant expertise to do an audit? And next is developing your audit questions. Okay, so developing an audit question, prepare list of questions to which they seek answers. Okay, now next is your comprehend. Okay, so let's do the key. I know you're waiting for the key. So planning for performance audit is earning of current assets, quick assets, develop, trade. So earning of current assets and quick assets, develop, trade. E is your equity entity you have to understand. Next is your objectives and scope of audit will be defined. Criteria of audit has to be determined. Approach of audit has to be decided. Questions of audit have to be developed. Assess. Assess audit team skills and whether outside expertise required. Design your matrix, and last is timetable and resources should be established. Okay, so your key was earnings of current asset. That means EOCA, earnings of current assets. EOCA, earnings of current assets. EOCA. So EOCA, QADT. So quick assets, develop, trade. Okay. Okay, next is your comprehensive audit. So comprehensive audit is your efficiency cum performance audit. It checks whether you are efficient or not. Okay, so efficiency cum performance audit conducted by your CAG for fields other than those covered by internal audit. So whichever fields are not covered by internal audit, they will be covered by the CAG in your comprehensive audit. So areas covered is investment decisions, project formulation, organizational effectiveness, capacity utilization, production performance, and budgetary and internal control system. I don't think you need any explanation for this key we will be discussing. So these are the areas covered by comprehensive audit. This is an important part. Okay, so definitely learn this. Next is issues examined in comprehensive audit. So overall cost of capital of project compares with the approved planned cost or not, that is whatever cost is actually incurred versus what cost you had planned. Next is cost control measures are adequate. So whatever decision you are taking to control the cost, are they adequate or not? Adequate system of repairs and maintenance. Purchase policies adequate. Procedures effective and economical. Planned rate of return has been achieved. So first point was whether the cost has been it whether it is within the cost or not. Next is whether the planned rate of return has been received achieved. Next is planned production or operational outputs have been achieved. Systems of project formulation and execution are sound or not. Insufficient or inefficient project planning. So these are the issues that you will look into while doing your comprehensive audit. Okay, so we did comprehensive audit. Areas covered, what did we do? That is your public IPO boosts capital. IPO boost capital. P stands for production performance. I stands for investment decisions. P stands for project formulation. O stands for your organizational effectiveness, budgetary and internal control system, and your capacity utilization. Okay. Now coming to the last part of the chapter, that is your propriety audit. So under propriety audit is the verification of transactions on the test of public interest, commonly accepted customs and standards of conduct. Emphasis on substance of transaction and consideration of financial prudence. So where will the emphasis be? It will be on the substance of transaction. That means on the base transaction itself, and consideration of financial prudence. That means whatever expense we have done, is it prudent or not? Is it rational or not? Auditors highlight avoidable expenditure. They will show that, boss, these all areas you could have avoided. For example, I'll tell you, during my articleship, I used to go to this client. It was a big client, and they had installed music in their washrooms. So the more pressure that you put, the more intensity does the music play. Now, according to me, that would be a wasteful expenditure. So there will be no fraud, nothing. They have purchased at market price, but it is a wasteful expenditure. Nobody needs to hear songs on basis of what how much pressure you are applying. Okay. So emphasis on substance of transaction. Auditor will highlight any avoidable expenditure. Expenditure may satisfy all rules. That means all authorizations and everything you are taking, but it just does not make sense to do that. But it might still be wasteful. For example, a school constructed but used 5 years after completion of construction. Now this is an avoidable expenditure. If you had to wait for 5 years, why didn't you make it later? Why are you spending your money today? Okay, so now there are your four principles of your propriety audit. First is expenditure is not more than what the occasion demand. That is how much ever only is required, you are spending only that much amount. Next is authority exercises powers of sanction of expenses which will not accrue to its own advantage. That means whichever person has the power to sanction expenses, it should not be allowed that by doing this he is also gaining something or from somewhere. Funds are not utilized for a benefit of a particular person or group of person. And next is your apart from agreed remuneration, no revenue is kept for management personnel to benefit. Okay, so there should be no avenue is kept open for your management personnel to benefit. Okay, so there should be given no scope, no slack. Next is your areas of propriety audit under section 143(1). So what are your areas of propriety audit? So before, what did we do? Before we did areas of your comprehensive audit, areas of comprehensive audit. Now we are doing areas of propriety audit. So first is whether terms on which the secured loans and advances, whichever secured loans and advances are made, if they are prejudicial, that means if they are not in the best benefit for the interest of the company. Next, transaction of company represented merely by book entries, are they prejudicial to the interest or to the interest of the company or not? So these book entries, they are already been set up just for the purpose of preparation of books. Investments sold at a price lower than cost. So these are your areas of propriety audit. So if you sold any investment at a loss, in such a case, it can be an area of a propriety audit. Next, loans and advances made by company shown as deposit. It should not be shown as deposit. Next, whether personal expenses have been charged to revenue, and last is cash has been actually received against shares allotted for cash. So whether cash has actually been received or not. Okay. The comprehensive audit issues examined. So, Papa, please carefully plan costly SIP purchases. Papa, please carefully plan costly SIP purchases. Papa, please carefully plan costly SIP and your purchases. This is basically your key. So project formulation, project policies, capital cost, procedures effective, cost control measures, system of repairs and maintenance, insufficient or ineffective project, planned rate of return, and your planned production. Okay, so these are the issues examined in your comprehensive audit. Next we did your propriety audit principles. So this key is poor. Of course, everything is related to finance, so someone has to be poor also. So not utilized for a benefit of a particular person. Expenditure is not more than what the occasion demands, not for your own advantage, and it should be apart from remuneration, apart from agreed remuneration. Okay. Next is propriety audit areas. Propriety audit areas is your long-term LIC policy, that is LT LICP. So loans and advances prejudicial to the interest of company. Transactions which are merely represented by book entries. Loans and advances made shown in deposit. Investment sold at less than cost, because if you are selling this as loss. Cash actually received against shares which have been originally issued for cash. And last is your personal expenses have been charged to revenue. So personal expenses should not be charged to revenue. This is your key. Long-term LIC policy. Long-term LIC policy. Okay. Just we are done with the chapter. If just done with the chapter, don't worry, nothing to worry. Okay. So now we already did this. Now there are some certain propriety elements in your Caro 2020. So I have given the clauses reference. So this is your clause 3, clause 4, clause 8, clause 9, clause 10, clause 11, clause 13, clause 15, and your clause 18. So all of these clauses have something related to propriety elements. I have written the clause and the alphabets also. If you want, you can check out the Caro video after you are done with this video. Just this is where the video ends, okay, at this red part. So therefore I have put also refer 5 for Caro notes. Okay, next is audit report of Comptroller and Auditor General of India. This is your audit report of CAG. So now report of CAG presented to Parliament in several parts consisting of the following. First is your introduction, second is your comprehensive appraisal, third is resume of the company's reports, and fourth is your significance results. So this will be your order. First will be introduction, second will be your comprehensive appraisal, third will be result of company's auditors reports, and last will be your significant results. Okay, so for this also we made the key. Don't worry, these keys you will get on the Telegram channel, and I'll also put them in the website under free resources. And yeah, with this we are done with this chapter, and I'll see you in the next one.